Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex, and I'm just going to go ahead and review some stocks, the key indexes, top forex pairs, and of course the crude oil markets. So without any further delay, let's go ahead and review these markets for March 30th, 2011. Alright, let's start with the dollar index. Ticker symbol is DX on the NYBOT. Basically, the dollar index is continuing higher now, as we can go ahead and see on the 5-day chart. We've got a flag pattern, and it's able to hold on to this flag area on the bottom leg. It did touch it previously up here a couple times, but you know what? I'm not that too. I'm not really that positive or hyped about it. I honestly think that this area could be broken and continue going lower, as we don't see much good coming out of this stock, or the dollar index, I mean. Now, as far as foreign markets are concerned, Asian stocks are up drastically. I see the Nikkei up 2.64%. It's up to 9,708. The Hang Seng index is trading at around 1.67% gain, although the Chinese index is a bit, kind of a laggard right now, the China index. But the Hang Seng is pretty strong, and I do have some key plays in the Chinese markets and later on in this video. But right now, I do want to say that the dollar index is going to continue going higher. I want to say that the dollar index will probably go lower as long as this positive momentum continues out of the foreign stock markets. However, the dollar index does continue its upwards pattern and upwards trend. You could probably see the stocks trading in a somewhat sideways, somewhat sidewayish. So I just want to go ahead and point that out. Let's go ahead and move on to our next chart, which is going to be the US dollar Japanese yen. And as you guys can go ahead and see, the US dollar continues strengthening against the Japanese yen. This is in line with my expectations, as I did expect the US dollar to strengthen to the Japanese yen. And that's exactly what we got on Tuesday, just a couple hours after my video recording and talking about it. You see this huge upward surge in the US dollar Japanese yen, and it just continues to do so. As you guys can see, I saw this crossover right here, and I was like, I'm pretty positive, and I'm pretty certain that this dollar will continue going higher, and that's exactly what happened. We continued going higher, and I do believe this uptrend will continue to hold. And as you guys can see, we have a trend line right here. And I'm just going to go ahead and remove a couple of these lines and kind of bring out to you guys the point that, if you guys just use the technicals and just try your best to understand charts, everything else really doesn't matter. And right now, I do believe that the US dollar Japanese yen pair should continue going higher as things stabilize in Japan, and as central banks continue to step in and start pumping out Japanese yens, going and making them go back into their own respective currencies. Now I want to go ahead and review the next chart, which is going to be the Euro US dollar pair. Now I'm just going to go ahead and look at the 5-day chart, and the Euro is weakening. Believe it or not, I did anticipate somewhat of an upwards trend in the US dollar and Euro US dollar pair. That's exactly what we got in the Tuesday morning session. I mean, if I go ahead and zoom in a little bit, you guys can see that at around, give or take, 1 a.m. in the morning or 2 a.m. around this time period is when I said that I do believe this trend will continue, and it actually has. And if you guys are trading, it was basically up to you guys to determine how you guys were going to set up your stops, because when I was pretty positive on it, that was pretty much when we were trading at like 1.41, basically somewhere around that area, and that would have pretty much equated into around a 40 pip gain. And you should have stops in place to keep whatever profits you make, although later on we did pull back, and that's pretty much a flag pattern right there. If you guys want to go ahead and see it again, this is our flag pattern. It broke it. Once it got broken, the Euro US dollar did continue going lower, and then it started consolidating after it broke above this trend line right here and this other flag pattern. So you got a flag pattern that was broken here. Basically, you got two flag patterns that were broken, and one flag pattern led to another rise, and then of course, after you break the following flag pattern right here, again, the Euro US dollar does back down and it does continue going lower again. So that just kind of points out, if you guys were to follow technical analysis, Euro US dollar is technically all over the place. Right now, as far as I'm concerned, over the daily charts, I'm not really sure where the US dollar, Euro US dollar pair will go. But as far as, as for technical analysis is concerned, we're kind of in a pennant-like pattern. And as long as we're able to break below or above, whichever direction this stock or this Euro US dollar goes is basically where you want to trade it, whether it breaks below this pennant pattern right here at the 1.40065 area or the 1.4085 area. So that's pretty much your resistance is up here, support is down here. So that's pretty much what I want to point out with the Euro US dollar. If you see a break above or below this, you just got to watch it very closely. If we go ahead and look at the 10-minute chart, I want you guys to buy into it or short, depending on whether or not you guys have a confirmation candlestick above here. Now, a confirmation is basically where you have two 10-minute candlesticks trade above a trend line. That's pretty much confirmation that works most of the time. Now, I want to go ahead and review the SPY Standards and Poor's depository, and pretty much the Standard & Poor was pretty positive today. Stock markets were up around 0.7% on average, and I just want to go ahead and point out that I do believe this trend will probably continue. As you guys can go ahead and see, the stock market is going to have some more positive momentum coming out of Asia, and also we are in the middle of earnings season, so chances are stocks have every reason to be going higher rather than going lower. So that's kind of what I want to point out with you guys. Just stick with it. Hope for the best to whatever picks you're doing, and overall your market bias should be positive rather than negative. Next, I want to go ahead and talk about crude oil futures. And around Tuesday morning, I was pretty negative on it. It did go a little lower, but then again it traded a little higher again. As you guys can see, a flag pattern was broken. Had I noticed a flag pattern, which I would have pointed out, but at the time there was no flag pattern being broken. But once the flag pattern was broken, of course it would go higher. Flag patterns are very important. Once you see a broken flag pattern, you trade it accordingly, regardless of what I had to say about it. But pretty much what would lead to the crude oil market going up? Well, Tuesday morning we did have a pullback, but then it just continued going higher. Again, I think that crude oil markets are really just hyped up bogus, but that doesn't change the fact that people are still doing the sphere-based trade. Obviously, though, I do believe that we're still in a downtrend. I mean, unless if you could break above the 107 area, which I doubt we will. I don't really think there's much room for crude oil to go higher, at least midway through 2011. As soon as the dollar index strengthens after the end of permanent open market operations, that will be the end of the crude oil rally. At least for the time being, it should abate. But later on, you'll probably see more strength in crude oil in 2013 through 2015. I'm more than certain, as we get more demand for crude oil and crude oil inventories start to drop and demand starts to pick up, at least from foreign markets. Now let's go ahead and review one of my favorite picks. And this is DANG, Dang Dang, e-commerce China Dang Dang. And pretty much Chinese stocks are continuing to go higher, but this stock has just taken a bathwater. It's just taken a wash. And it's fallen dramatically from its highs at around $36 per share. And right now it's trading at around $22 per share. And to be honest, I really think that this area could hold. I think that this is going to be your final area of falling, and I believe that since we're on an ascending or a descending triangle, and this descending triangle has been broken, in fact, I think it could actually go higher. We also have a positive short-term green triangle on the Market Club chart technology, and pretty much Trade Triangle Technology points out a short-term uptrend in this stock, and we are having some short-term resistance at 20-day moving average, but I believe this will be broken as Chinese stocks are basically my favorite stocks, and pretty much that's kind of what I see. I think Dang Dang is definitely my favorite stock, or one of my favorite stocks at least. So pretty much I like Dang Dang. I think the stock will continue going higher, and at least over the short term, you guys should probably go ahead and take a position into it towards the long side. Following that, I want to go ahead and review Vernet X Holdings. This is a stock that I recommended at around $13, $12 per share. It's trading at $19 per share. The moment I saw this pierce right here, I thought, I think this stock has a lot of room to the upside. I really do. And pretty much we got that upside. I mean, it's trading at around $19.34. I couldn't be happier than that, guys. And this is a stock that I recommended based upon some information my friend gave me, and he asked me my honest feedback on it. I looked into it, and I couldn't be more pleased with this company. I mean, they have technology and certain patents with 4G. They can pick a bone with T-Mobile, Verizon, AT&T, Sprint. It doesn't really matter. I mean, these guys can basically push their hands out and say, hey guys, give me the money. And basically this company is only worth $800 million to $1 billion, but these patents could easily be worth billions and billions upon billions of dollars, depending on how they structure the deal. Anyway, I don't have any more time to talk in this video, so please be sure to go ahead and check out the trading software that I use. It does come in handy. You know, this isn't the only indicator that actually came in handy when I was doing the, this is a symmetrical triangle pattern, or you could also call it the pennant pattern. On top of that, we have a weekly and short-term triangle that pointed to the upside. But you know what? If you guys want to use this trading software, please be sure to go ahead and check out the link below this video. If you guys want to see more of these type of videos in the near-term future, I suggest you guys subscribe, because we get a lot of these great plays on a regular basis for free. Anyway, that does it for me for today. I'll have more for you guys in the coming weeks and months ahead.